Today, OGI stock jumped 28% on the announcement of a strategic investment from a wholly owned subsidiary of British American Tobacco. And so, in this video, I'll be analyzing Organigram Holdings Inc, ticker OGI, and by the end of the video, I'll draw my conclusions on whether the stock is a buy or not at the moment. And if you're new here, I want to invite you to subscribe the channel and hit the notification bell so you can be notified when I publish new videos. Let's start by seeing some details of this British American Tobacco investment. The BAT subsidiary has subscribed for approximately 58.3 million common shares of OGI, which represents a 19.9% equity interest on a post-transaction basis for total proceeds of approximately 221 million Canadian dollars at a price per share of 3.792 Canadian dollars. That's equivalent to 3 American dollars per share. Organigram and BAT have also entered into a product development collaboration (PDC) agreement pursuant to which a Center of Excellence will be established to focus on developing the next generation of cannabis products with an initial focus on CBD. Under the terms of PDC agreement, Organigram and BAT have agreed to jointly develop cannabis vapor products, cannabis oral products, and any other products, IP or technologies the parties mutually agree to develop. For those who don't know, Organigram Holdings is a leading Canadian licensed producer of high-quality medical and recreational cannabis. The company reported weak quarterly results in last January, with net revenue declining 23% year-over-year to the significantly lower wholesale revenue. Gross margin came in at negative 20% due to lower selling prices and inventory charges, reflecting ongoing product assortment and cultivation challenges. OGI has been experiencing operational issues as it shelved capacity and changed cultivation methods to improve efficiency and tweak production to match consumer demands. Besides all that, in early February, stock price jumped above $6, in line with many other companies in the cannabis industry. This uptrend reflects a renewed exuberance in the cannabis sector, given the Democratic win in the US election and visible progress on the federal legalization front. Despite that, in my view, right now, OGI stock is overvalued. On TipRank's price target for OGI stock is $2.53, which implies a downside around 31%. Furthermore, in November 2020, the company raised $69 million by issuing 37 million shares at $1.85 per share, which looks like a steal at today's prices. We also have to keep in mind that the current rally in some Canadian cannabis stocks is largely fueled by renewed interest in cannabis given positive US legalization progress and short squeezes. The biggest near-term fundamental driver of the industry is the potential US federal legalization of cannabis. However, despite recent comments made by some Senate members and rising popularity among Americans, it remains too difficult to predict the exact timing. With all this in mind, I think buying OGI stock at current levels is very dangerous. And there is one more thing: Organigram remains unprofitable and burns through significant cash each quarter. The company is not expected to post a bottom-line annual profit until 2023, and if sales disappoint in upcoming quarters, the stock will surely tank. Nobody knows when federal legalization will be done, and in my opinion, there will be other buying opportunities before that happens, so I'll be much more comfortable buying this stock in the $2 range or below. There are better companies to invest in the cannabis sector right now, and I'll be talking about a couple of them in future videos. Stay tuned and don't forget to subscribe the channel. Keep in mind that I'm not a financial advisor and you should always do your own research before investing in any stock. I hope you enjoyed this video and don't forget to smash that like button to support the channel. Wish you the best and thanks for watching.